All right, let's jump right in. What if I told you that the entire modern history of the Nigerian economy, all the incredible booms, the devastating crashes, the big sweeping reforms, and even its deepest crises, what if all of that could be told in just a single line on a chart? Sounds crazy, right? Well, for 40 years, the pulse of this nation has been recorded, literally, tick by tick on the trading floor. So, you see, this isn't just some chart about prices. No, it's a story of power. It's the story of how 8 different leaders have shaped the wealth of a nation. So, the big question is, can one line really tell a nation's story? I mean, everything? Well, that's what we're here to find out. In this explainer, we're going to look at this chart not as some boring financial tool, but as a real historical narrative. It's a single line that charts the journey of power and wealth in Nigeria over 4 decades. So, yeah, let's find out. Every story has a beginning, and for our line, it all starts right here, January 1985. That's when the All Share Index, or the ASI as everyone calls it, was created. Its job was simple: track the overall health of the stock market, and they gave it a starting value of 100. Now, you have to picture this. Back then, the market was tiny. I mean, really small. And honestly, pretty much nobody was paying attention to this number. But that starting point, that base value of 100, it is absolutely crucial. It's the point from which everything else that happens, well, begins. Okay, so let's start with Act 1, the pre-democratic era. These were the formative years, right? This is where the foundations of the modern market were laid. And, well, it was often a painful process, happening under military rule. So first, under General Ibrahim Babangida, we had this massive economic shift in 1986. It was called the Structural Adjustment Program, or SAP. And believe me, it was tough. We're talking about the naira getting devalued, subsidies being removed, a huge shock to the system. Then you had all the instability from the June 12th election annulment. And that was followed by the Abacha era, which, well, that's when Nigeria was really isolated by the rest of the world. Now, here's where it gets interesting. During those Abacha years, if you just glanced at the chart, the line looks kind of calm, stable, even. But that was just a mask. See, what was happening was the government was keeping the official exchange rate artificially stable, while on the parallel market, the real market, the value of the naira was absolutely collapsing. The stock market was basically in limbo, completely cut off from the rest of the world. And that brings us to Act 2, democracy, boom, and bust. And wow, this was a pivotal turning point. We're talking about the return to democracy and the absolutely wild ride that came right after it. I want you to burn this date into your memory, May 1999. Why? Because this is arguably the single most important moment in the entire history of this market. This wasn't just about a new president taking over. No, this was a fundamental change of the entire system. After 16 long years, military rule was finally over. So, with President Olusegun Obasanjo in charge, Nigeria basically rejoined the world. He managed to secure a massive, and I mean massive, $30 billion in foreign debt relief. And just like that, investors came rushing back in. The market just took off. But the thing that really poured gasoline on the fire, that was the next big move. And that catalyst was the banking consolidation of 2005. Here's what happened. The government basically forced the number of banks to shrink, going from 89 pretty weak ones down to just 25 much, much stronger ones. Now, to do that, to meet the new capital requirements, what did those banks have to do? They had to sell shares to the public. And that, right there, poured a ridiculous amount of fuel onto an already roaring market fire. This incredible momentum just kept building and building. By early 2008, the market was, well, it was in a state of absolute euphoria. Everyone was making money. On March 5th, 2008, the ASI hit its all-time peak, 66,371. It really felt like the party would never ever end. But here's the crazy part. What nobody knew was that the crash, it had already begun. And the fall, it was brutal. In just 1 year, by March of 2009, the market hit a devastating low point. The index had completely collapsed to just 20,827. What happened? Well, the global financial crisis hit Nigeria like a hammer. That banking bubble, the one that had been built on all that reckless lending, it burst. Completely. In just 12 months, the market collapsed by 69%. Think about that. Years and years of gains were just wiped out. And if you were a dollar investor, it was even worse. All right, which leads us to Act 3, a long, bumpy recovery. This next phase, it was all about facing new economic realities and trying to clean up the mess with some pretty bold policy responses. So under President Goodluck Jonathan, the government made a really critical move. They created something called AMCON, the Asset Management Corporation of Nigeria. The easiest way to think of it is as a bad bank. Its job was to step in and buy up all the toxic, non-performing loans that were basically choking the entire financial system. And we're talking about 5.6 trillion naira worth of them. This was huge. It didn't just rescue the banks, it gave the market a solid floor to start building from again. Then, in 2015, President Muhammadu Buhari took office, and he was immediately hit by a massive collapse in oil prices. The administration's response? Well, they initially refused to devalue the naira, and they put in place capital controls. The result? 2 recessions, and a whole lot of foreign investors who decided to just stay on the sidelines. To put it in perspective, the naira itself went from 197 to the dollar all the way to 461 during his time in office. And this really gets to the heart of what it felt like to be an investor during those years. It's like there were 2 different stories being told at the same time. If you looked at the chart in local naira terms, it looked manageable. You were even seeing some positive returns. But if you were investing in US dollars, that devaluation meant you were living a completely different and much more difficult story. It honestly felt like you were running as fast as you could just to stay in the exact same place. And that brings us right up to today, to what I'm calling Nigeria's dual reality. It's a market that looks one way on the surface, but is something completely different once you scratch just a little bit deeper. So President Bola Tinubu takes office in May 2023, and right out of the gate, he completely shocks the system. I mean, in his very first month, he gets rid of the long-standing petrol subsidy and unifies the exchange rate. We're talking 2 massive, massive reforms, bam, bam, just like that. And then that was followed by the announcement of a new banking recapitalization, which sounds a whole lot like that 2005 consolidation, doesn't it? And the impact? Oh, it was profound. In naira terms, the market absolutely soared. It hit an all-time high of nearly $103,000. Incredible, right? But, and this is the big but, here's the paradox. Because of the super sharp currency devaluation that came with the reforms, the market in US dollar terms is still a staggering 88% below its 2008 peak. Let that sink in. An all-time high in naira, but still deep, deep in the valley in dollars. That is the dual reality of investing in Nigeria today. So let's step back and look at the whole thing, the full 40-year picture. You've got 8 leaders, countless major events, all captured in this one single line. But if you look really, really closely, something amazing happens. A kind of rhythm starts to emerge. You start to see a pattern. It's almost as if there's a predictable cycle that lines up with a 4-year presidential term. And all of this leaves us with one final massive question. You've got a market hitting record highs in its own currency, but at the same time, it's stuck in deep lows when you measure it in the world's reserve currency. It's a total paradox. So the big question for everyone is, what's next for this incredible 40-year story?